Hello, everybody. So I'm realizing that a lot of people are talking about bear market, bear market, bear market, bull market, buy the dip, DCA, don't buy, don't do this. And then this word gets thrown around: recession, depression, stagflation, and GDP. And now I'm realizing through my videos, I got people knowing what a bear market is. I gave you guys averages, and this applies to stock market, this applies to crypto market, and this applies to the real estate market, because at the end of the day, this is all our economy. So today I want to make a very cool video, and I want to give you some stats about recession and GDP and explain to you exactly what it is. Most people, for lack of better knowledge, for lack of better understanding, and for lack of you just don't give an F about things until they hit you, don't really know much about what a recession is, except that maybe it's 2 negative quarters of GDP. What the heck is GDP, and what the heck is 2 negative quarters of this GDP? I'm gonna give you some stats as I always do. I'm gonna start a series like I always do. And if you have some comments, hit me up down below and I'll be happy to answer you in the upcoming videos. Let's define what a GDP is. GDP stands for Gross Domestic Product. And a gross domestic product can be defined as the monetary value of goods or services produced over a certain period of time in the United States and bought by a final user in this period of time. For all intents and purposes, we like to use the word GDP when it comes to a quarter. A quarter is 3 months. There's 4 quarters in a year, which makes up 12 months. Now we know what a GDP is. What is a recession? A recession is defined as 2 negative growth quarters of GDP. You're wondering, what is our current GDP? Our current GDP is negative 1.5%. We were positive 6.9% the quarter before, positive 2.3% the quarter before that, and positive 6.7% the quarter before that. During Corona, we had our last recession. We had a recession for 3 months. The negative GDP was negative 5.1% and negative 31%, which was followed by a positive 33.8% growth, which leads us to where we are today. Negative growth in Q1, probably negative growth right now in Q2, which we're going to find out about next quarter in Q3. The question is, Adam, what is the average GDP? What is the country supposed to be making? What is America supposed to produce as a nation over an average over a period of time? Since 1948 until today's day of 2022, the average GDP was 3.14%. So even though we're at a negative GDP growth, not negative GDP, but negative GDP growth, we are still higher than the average threshold for the last 75 some odd years. Since our country's inception, we had a total of 13 recessions, not counting the current recession that I believe that we're in. The average length of a recession is 11 months. So if we had a negative GDP quarter last quarter, that's 3 months. We will know this quarter at the end of this month. So technically, we're 5 months into an average 11-month recession. It's very important to understand that, because I'm going to correlate it to some bear markets, which we're in right now. And then I'm going to give you some hope as to what's going to happen next year. Are we going to grow, or are we not going to grow based on statistics? Before I go any further, give me the like, share, and subscribe. These videos ain't easy. And the way you can show me some love is hit the like button so that the almighty YouTube algorithm shows me some love based on your hit the likes. Of the 13 recessions, the shortest recession was obviously during COVID, and that lasted for 3 months. And the longest recession was in December 2007, and it ended in 2009, and it lasted for 18 months. How do you measure GDP? GDP is measured in 2 ways. The quantity of goods or services provided or sold, and the price of said goods and services that was sold for. Give you a quick example. Let's say you shine shoes. You shined 5 pairs of shoes. You charge $5 per shoe. And let's say you sell apples. You sold 5 apples for $1. 5 shines for $5 is $25, while 5 apples at $1 is $5. Together, that's $30. Your GDP for the quarter would be $30. Let's say next quarter, you're able to sell 5 apples, but this time the apples cost $2. And let's say you still shined shoes, but instead of 5 shoes, you are only able to shine 2 shoes at $5. You take the 2 shoe shines at $5, that's $10. You take the same 5 apples times $2, that's $10. So your GDP for the next quarter would be $20, which means that your GDP went down by 50% and your economy sucks. What are some bad things currently in our economy that's leading to a recession? We have the war, we have inflation, and we, of course, have China lockdowns and other COVID lockdowns, but pretty much China was the last big lockdowns. But they did ease restrictions, and I don't see any massive lockdowns in the future. All those things put together, plus a bunch of other smaller things, is contributing to the recession. Why? We have a lot of bottlenecking, which means that we're not producing as much. Remember, it's quantity of goods and services times the price of said good and services, which means the prices could be going up due to inflation, but the quantity is going down. So if we're charging more but producing less, our GDP would also come down. Out of the 13 years of recession, 7 out of 13, you had negative growth of the S&P 500 or the stock market. For this video, when I say stock market, I mean S&P 500. Not the other indices. Of those 13 recession years, the year following the recession year, 10 out of 13 of those recessions, the stock market grew. So 7 out of 13 were negative growth on the year of the recession, while 10 out of 13 was positive growth the year after. And there was only one time in history from 2001 to 2002 where we had a negative growth of the stock market during the recession and a negative growth of the stock market the year after the recession. These are very important stats. Why are these very important stats? Because currently we are also in a bear market, and history shows us that the average bear market is 9.6 months. Currently, we are in our 5th or 6th month of a bear market, depending on when you consider we started. We pretty much started at the end of last year or at the very beginning of this year. We are currently in the middle of June. If we are halfway there, we should end this bear market, according to averages, by the end of this year. And we have a recession in this year. So based on the recession numbers, and we have negative growth of the stock market now, we will probably have positive growth of the stock market next year. But it gets better. Of a bear market this year, from the history of all bear markets, I'm not talking about the recession right now, 75% of the time, the year after a bear market year, we also have positive growth. The average is 17%. So if we currently have a recession now and we have negative stock market growth now, history would tell us there's only been 1 out of 13 times that we will have negative growth next year as well. The odds are pretty good. On top of that, history has shown that 75% chances we will not have negative growth next year. Between the chances for the bear market and the chances for the recession, giving you these stats, probably next year will be a positive growth year in the stock market. And again, if going by the old stats, we will probably be having a double-digit teen growth rate next year, which means do whatever you want because I'm not a financial advisor. But in theory, if you can ride out this year, that's why I keep saying I'm not going to be buying in Q2. I'm waiting for results, which means Q3, Q4 of this year, I will be reevaluating, because if my numbers are right, if my data is right, if my averages is right, and if you take into account past events that can possibly predict future events, then we should be having a good year, and maybe towards the end of this year would be a good opportunity to get into the stock market if in fact we have a bear market on average and we have a recession on average. Now, take all the data that I give you with an absolute grain of salt, because what happens in the past does not necessarily mean it will happen in the future. And what happens in the future doesn't necessarily reflect what's happening today. This is all just data that allows you to try to make some sort of educated guess, a theory, a hypothesis of what you could be doing in the future. I hope this video helped you in some small shape, way, or form in any one of my channels. Before I go any further, I do have 3 channels. I have a stock channel, I have a real estate channel, and I have a crypto channel. I would appreciate it greatly if you subscribe to all 3 channels if investing and being a well-rounded investor is something that you would like to be. Thank you.